This is LONGWave, featuring technical analysis and market analytics by Gordon T. Long, editor and publisher of GordonTLong.com. The content of this presentation is strictly the opinion of Gordon T. Long and is based on his analysis, which he feels to be accurate and unbiased. Participants may or may not hold positions in any securities that are discussed. You should always consult a registered investment advisor before making any investment decisions. Now, let's join Gordon for today's show.
Thank you for joining me. It is Wednesday, December the 7th, 2016. I'm Gord Long. A reminder before we begin, do not trade from any of these slides. They are commentary for educational and discussion purposes only. Always consult a professional financial advisor before making any investment decisions. The purpose of the audio slides is to talk about the areas that are not updated in your monthly analytics and technical analysis report. This is based on our annual cycle as outlined on the subscriptions page on our site. We intentionally keep the technical analysis charts to the subscribers' reports so as not to confuse them with the drivers operating behind them. Drivers in the long term are primarily the fundamentals. In the intermediate term, risk, and the short term is about confidence and sentiment. This month I'd like to cover a range of linked topics shown here regarding the growing political investment risks facing us in 2017. I've touched on some of them in recent macro analytic videos, but I want to try and tie them together for us here today. I believe investors need to focus on the two key long-term structural changes now underway, which are going to ignite destructive global dislocations through the very early part of 2020. To better understand why this is going to occur, we need to place them in context. I have envisaged the evolution since the great financial crisis as moving from a financial crisis at that point through regional economic turmoils, which we are presently witnessing, to an inevitable global political set of crises. I felt the political crises in front of us would be a result of the unwritten social contract between the electorate and the elected breaking down in many of the developed economic nations burdened with lack of growth, lack of jobs, and entitlement programs. We are now seeing the initial signs of exactly this occurring on a global basis. Before we explore why this is occurring, I want us to first examine the major well-followed long-term economic cycles presently underway. This initial cycle chart is from an in-depth discussion I had with Harry Dent earlier this year. Since leaving Harvard, Harry has spent most of his adult working life studying demographics and cycles. An ominous telltale is that the four cycles he most closely follows are all presently heading down or flat. Dent attributes this to basically the demographics of the baby boom generation, their specific spending habits as they enter retirement, and the overall falling birth rates in the developed economies. His work suggests the cycles don't reverse until the early part of 2020. Another well-respected cycle analyst is Martin Armstrong, who I additionally interviewed to discuss his highly regarded economic confidence model. This cycle is based on a very long cycle of human history and civilization. It currently shows, according to Armstrong, that economic conditions have been deteriorating since 2015, that is September 2015, and will persist through the beginning of 2020. Another very well followed and researched cycle is the Kondratiev long cycle. This approximate 50-year or generational cycle is also suggesting that historically we should presently be headed lower into the Kondratiev winter, part of the four-season cycle that it is based on. The winter cycle has been somewhat delayed as the debt and credit levels have not yet headed lower, which they historically did during the last cycles when economies were operating under the gold standard and the major global currencies were not in fact fiat currencies. I believe that is part of the delay that's going on here. So what can we conclude other than it seems all the cycle theory and analysis indicates good times are not likely in front of us through at least early 2020? Historian Peter Turchin also explored historical cycles of social disintegration and integration in his recent book, Ages of Discourse. Turchin proposes a model of rising discord that eventually leads to a new cycle of cooperation and compares the expected result with historical data. He finds 25-year cycles that combine into roughly 50-year cycles, comparable though not identical with Kondratius' proposed economic cycles. These 50-year cycles are part of the longer 150 and 200-year cycles, and the 200-year cycle being very close to the work by Martin Armstrong, that move from cooperation through an age of discord and disintegration to a new era of cooperation. These long cycles parallel the cyclical analysis of David Hackett Fischer, whose masterwork, The Great Wave, Price Revolutions, and the Rhythm of History, express similar kinds of views, and when you tie them together, you come up with this list here, that based on history, we can anticipate ever higher prices for FEW essentials, that is food, energy, and water, ever larger government deficits, which end in bankruptcy, repudiation of debts, new issue of currencies, rising property and violent crime and illegitimacy, rising interest rates. Until very recently, this was considered impossible, rising income inequality in favor of capital over labor, continued debasement of the currency, rising volatility of prices, rising political unrest and turmoil. Not a pretty list, but if you really broke it down and studied Turchin's work, his model identifies really three primary forces in these cycles. An oversupply of labor that suppresses real inflation-adjusted wages. Check, that's what we've got. An overproduction of essential parasitic elites. Check, that's what we have. And a deterioration of central state finances, that is over-indebtedness, decline in tax revenues, increase in state dependence, fiscal burdens of war, etc. Is it any wonder that political stress, however you want to measure it, is rising? Cycles are the result of the interaction of complex, nonlinear dynamics, and so they are not entirely predictable in terms of pinpointing the exact moment of crisis or the outcome of a systemic crisis. The recent emergence of socionomics, spearheaded by Robert Prechter of the Elliott wave renown, also sheds light on the root of these overlapping cycles. Socionomics is the field of study conducted under the hypothesis that waves of social mood motivate the character of social actions. What is social mood? Social mood is a shared mental state among humans that arises from social interaction. Social mood predisposes individuals in the group towards emotions, beliefs, and actions. It fluctuates constantly in a fractile pattern. The Socioeconomics Institute illustrates a lot of this in some very good charts. This one shows political correctness that lives and dies with this social mood and where we stand now. They talk about negative social mood and how it has polarized America, and the majorities have deeply negative views of other parties right now, and I think we've seen that demonstrated. Political polarization has exploded since 2000, quite dramatically. This leads us to conclude that political polarization, lack of cooperation, rebellion against political correctness are all presently manifesting themselves into a rejection of the status quo, of the system, and those trusted with its maintenance. Investors need to understand and prepare for this fact that we are only at the beginning of an economic shift downward in the trend of the cycles that I've been talking about. The already failing debt supercycle will end as a consequence. I think we also need to focus on Europe. It appears to be the next real hotspot, if I can consider the recent U.S. election as being the first, or at least the second after Brexit, going forward. The Italian constitutional referendum here just held last weekend will eventually be shown to have been as impactful as Brexit and the shock of Trump being elected president of the U.S. They all can be viewed as potential rejections of the status quo. There is going to be a steady, sequential set of highly charged political events throughout Europe coming in 2017, which portends of mounting political instability and social unrest. All of this is about political polarization. It is about how negative social mood shift has polarized political positions and how majorities now have deeply negative views of other parties and their views. There is an increasing breakdown in cooperation and intolerance of other views. Souring social mood, loss of purchasing power, stagnating wages, rising inequality, devaluing currencies, rising debt, political polarization, and elite disunity are all manifestations of this phase. The June 2008 issue of Progress in Socionomics reported that scientists were predicting a reversal of the trend towards globalization. That was led by Dr. John Castes. He also illustrates how financialization and its core products are involved and how they play into this breakdown of the global political space with growing anti-globalization, anti-status quo, anti-establishment populist sentiment. All of the above leads to and further assists in driving the two key long-term structural changes now underway that I referenced initially. First, there is now a clear shift in attitude within the electorate of the developed economies towards anti-globalization. Existing free trade agreements, tariffs, and protectionism are all now on the table. Secondly, the debt supercycle is coming to an end. It is the fuse that will ignite a combustible mixture. The explosive mixture is about the fiat paper reserves underpinning the global economic system, which are presently built on failing wealth creation, which is required to maintain the collateral values supporting the pyramiding debt leverage levels through financial gimmicks such as rehypothecation. The derivatives swaps market is the explosive within this mixture. The catalyst to ignite the fuse will likely be correcting financial markets that are historically highly overvalued, disconnected from fundamentals, and can only be best described as in the third and final central bank bubble of the new millennium. As I always close these narratives, and I continue to remind you, don't worry. At the end of the day, the government will do the only thing it really knows how to do, and that is they will print the money. I would like to take a moment as a reminder, do not trade from any of these slides. They are for educational and discussion purposes only. Thank you for listening, and until next month, may 2016 have turned out to be an outstanding investment year for you and your family. Thank you.
This has been Gordon T. Long, editor and publisher of GordonTLong.com. New recordings are posted regularly and can be found at GordonTLong.com. New show notifications are available through RSS feed, iTunes, and other social networking venues at GordonTLong.com.